No sound. I'm trying. Let me just. Now okay? Oh, great. Super. I've just clicked on a few random things and we're back. Now, again, back to it. Good afternoon, everyone. Welcome again. We just had a small hiccup, but we're back and we're here. So now that you all can hear me, you can see my screen okay. I'll give it a minute or two before we get into the swing of things. Let me know. Put it into the chat. Let me know where are you joining me from. I'm doing great. I'm doing great. How are you guys doing? Thank you all for attending. I'm looking forward to going through this session together with you all. I see a lot of familiar names here, so I'm super happy about that. And as you guys are telling me where you're joining me from, let me know as well. Do you use the Davas or the Davas Box theory? MT4 stopped working on 2 PCs. That's Mine's still working, fortunately, but I haven't been jumping to any trades today. I've just been sitting there and watching it a little bit. Well, good stuff. For those of you who have not heard about it before, I will be sharing with you some views and some ways to use the Davas boxes. So I hope you learn quite a bit about that. You could slowly integrate that into your trading strategies. What's a good monthly gain percentage? Hey, whatever you're happy with. It's never too big, it's never too small, so long as you're happy with it. Good effort into the trading, good results. You don't have to go for a big fixed number kind of target number. So don't stress out too much about a good monthly gain percentage. Go for whatever you're comfortable with. Right? And it's not just about monthly gain, it's about how much risk are you taking, what kind of drawdown are you surviving through to achieve that percentage gain. All right, so as we go now, let's get started again. Welcome everyone. I see a lot of questions here, so before I get into that, are you trading? I'll get to your questions. Wait. So Desiree still says there's no sound. Do you guys hear me okay? Hope it's okay, good. All right. So those of you who can't hear me, check out, reconnect back or check your connections. If any case, this is recorded, so you will be able to check back onto this session as well. All right. IC Markets webinar today, we are going through the trading strategy series in terms of using the Davas Box theory. Okay. So as you guys are all sharing with me here, never used it before, never heard of it before, I will be sharing with you some ways to use it, some ways to apply it, and then to hopefully integrate it into your trading system. What's behind me? I've got a lot of stuff. I've got computers, I've got big window out the back as well. So a lot of things behind me. All right, so as usual, before any webinar sessions, before we get started, a quick disclaimer: any information contained in this webinar should not be construed as advice and is presented as educational material only. International Markets, Capital Markets Private Limited has not considered your objectives, financial situation, and needs, and you should consider its appropriateness for your circumstances. All right. Just checking. You guys see my screen, or you can't see my webcam is definitely on. Okay. All right. So just sharing with you guys again on the disclaimer is that I will be sharing with you how to use or how I use Davas boxes. If you do apply it to your trading strategy, if you do apply it to any trades, please make sure you do your own due diligence, check your charts, check your analysis, leverage and margins before you jump into any trades. All right. So quite a number of things to get through today. in terms of the Davas boxes. First thing, what is it, right? So those of you who don't know it, I'll tell you what is the Davas box theory. How do you draw the boxes, right? Which asset classes can you apply it on? And then lastly, improving on the Davas box theory, which is where I will be, doing some live drawing of the boxes together with you. I'll be applying some different other indicators and additional tools that you can use in addition to the Davas box theory so that it might be able to help you better with your trade analysis. Okay. So again, I do think that most of you already know me. My name is Jin Dao. Most of you know me as Jin. I am one of the investment analysts here at the Everest Fortune Group, award-winning research team. I have previously managed a multi-million-dollar FX forex fund, right? So I've been trading for more than 10 years now. I'm trading full time. If you have any questions, trading related questions, I'll be happy to help you through that, give you my couple of thoughts and views about any trades or any analysis that you have questions on. But for today, we are looking at the Davas boxes. So again, just want to make sure that you guys are all ready, good to go. Let me know. And the first question is, what is the Davas box theory? Okay. Davas box theory is basically, right, it's a tool, it's a system, it's a bit of a strategy, something that you apply, you draw it onto your charts. Okay, you draw it onto your charts, and it's a momentum. It's a bit of a momentum indicator. I don't want to say it's an indicator because you can't click on trading view and apply it as an indicator. There has been a lot of other EAs and all the other EAs and strategies that's being applied, but it's very different what I've seen on TradingView. So it's a strategy, it's a system which tells you about momentum, but it's very trend following, right? It's a trend following momentum strategy. Okay. Hey, Des, very good that you've got everything working for you now. So welcome back. The main thing, one of the main things about the Davas box theory is that it does not, all right, put that there. It does not predict, right? So a lot of times we come to the point where we're looking at indicators to try and identify or predict where price could be turning or heading towards. Hey, this does not predict, or it does not, in other words, anticipate a market movement. Okay, it's not about predicting, it's not about anticipating, it's more about reacting. Okay, so it's because it's a momentum indicator, momentum strategy. As you see price moving down, right, as you see price moving towards the downside, what's going to happen is at every point as it moves down, you'll be thinking, maybe at that point, and then at that point you'll be thinking, can I sell? At which level can you sell? Right? So it's helping you identify that momentum and the trend as it's moving towards the downside, helping you react to that movement to actually identify levels, right, or good levels where you could be confident to start looking to sell, have your take profit and then your stop loss at a reasonable level, right? Your take profit at reasonable levels. That's where your Davas box, when it hits a trigger level, it signals to you, hey, this could be a good place to sell, or on a rising box, it triggers to you, could be a good place to buy. Okay, so the main thing to remember here is it's not predicting a move, it's not anticipating a move, it's reacting to the price movements. It's a momentum and trend following. Right? If you want to try and look to Davas boxes as a reversal indicator or reversal strategy, it's going to be hard. Yeah, it's going to be hard. You're probably not going to be very, you're not going to use it very successfully. The better way is to use it more as a trend following momentum strategy. Okay, it works on any time frame, right? And those of you who have attended all my sessions, you know that as much as almost every indicator works on every or any time frame, what I always suggest is do it first on the H4, right? And then if you have to, onto the H1, right? And especially in the Davas box, I would say you can look at it into the daily time frame as well, the D1 time frame. Okay, so H4, H1, and on the daily time frame. It ultimately depends. How do you choose whether to look at the H4, H1, or the daily? It ultimately depends on how far back, what kind of time frames are you looking to trade, right? If you're looking at a shorter term intraday kind of trade, you'll be looking at the H1 time frame. If you're looking at slightly longer term, right, you could be looking at H4, look at key levels on H4, and then as it moves into the H1, you could be scaling down a little bit to look into the H1. Okay, so you'll be looking at H4, H1, and on the daily time frame. I'll give you examples on all those three different time frames. The Davas box theory, unfortunately, right? Unfortunately, the Davas box theory was actually first developed when I think the guy's name is Nick Davas or something Davas, first developed this strategy for stocks when he was trading in stocks, right? So way back in the day where he's developed this strategy, it was only for stocks. And in back then, when you're trading stocks, you could only buy, right? It's not what we have now. You can buy, you can sell, you can go long, you can go short. No, back then it was only to buy, right? And that's why originally for Davas box, if you read anything about a Davas box theory, they always say apply it to a 52-week period, right? 52-week period only on stocks. So they look for over a 52-week period, they look for the high levels, right? Draw a box, identify the high levels, and only when price breaks above a 52-week high, then it tells you to buy. Okay, so fortunately, with the technology that we have, with the way that we're trading now, we do have a lot more volatility. We do have a lot more opportunities to trade. So we don't have to just identify a 52-week period. We can actually have the choice to consider or to define our own look back period and then to apply this onto different time frames. Can you imagine if you just had to only use the box on a 52-week period on FX? You know, that's going to be such a long wait for a trade that could fluctuate and be volatile and trade you out straight away. Okay, so we're going to tweak it a little bit. I'll show you how I tweak it a little bit onto not just onto stocks but onto FX as well. Any questions so far? Again, quick reminder is that if you have any questions at any point in time, please feel free, put it into the chat, let me know. Usually I'll just go on and on and on. So, you know, don't wait for me to take a breather, just ask away, all right? So this is how it looks, right? This is how it looks. You can see the boxes here being drawn. And then as we have the boxes here, these actually identify the high points, right? The Davas box actually identify the high points and also the low points. The high points and the low. Okay, in this case, you can see I did it on the H1 time frame, and this is I drew a box for every day, right? So every day that is completed, I draw a box that encompasses the high and the low. This gives me the view straight away, right? As much as this is an example, it gives me the view that I have a good strong resistance at that point. So whenever you have levels that's forming up together, top of the boxes forming up together or bottom of the boxes forming up together, it develops that support, firstly that support and resistance level. Okay, so you can see that it forms a good resistance level there at the top, and then you can see that as all these levels here, this low here, and then the low point here, and the low point here again, and again here, and again here, this immediately forms a very strong support level, right? It forms a very strong support level, and that also happens to coincide with that 0.9950 round number support level. Okay, so again, quick recap, scroll back up, works on any time frame. You're looking at your period. So in this case, I have it on the H1. I'm looking at I encompass it on the daily, end of the day highs and lows. Helps me identifies the support levels and the resistance levels. Okay, and then you can see that once it breaks that point, because it's a momentum system, a trend following system, we're looking for it to push down as it breaks that key support level, which is a 1, 1, 2, 3, 4, 5 box support level. It's a strong break of that level. Then you'll be looking to sell at this point here towards the downside. You have your stop loss above that level, right? Above that resistance level. So you could have a stop loss up there, right? You'll be looking to sell here. And then your take profit will be below, where we could have lower boxes, or you could be using your Fibonacci levels or other indicators, which I'll share with you later on. Okay, so just a quick snapshot view. This is the first example on how we would use the Davas boxes. Okay, so how do you actually draw this? It's really simple. It's really simple. Basically, you just have to determine, firstly, what period are you considering, right? Do you want to draw this on the H4 or the H1 or the daily time frame? I'll tell you straight away is that you shouldn't draw it on all time frames, right? And this is a manual process. There hasn't been, or rather, I haven't found a reliable method or indicator or EA to draw this for you yet, but that's why this is a manual process. So you wouldn't want to be drawing this on the daily time frame and then on the H4 time frame and then on the hourly time frame. You just end up with too many boxes. It makes your chart a big mess, creates a lot of confusion and uncertainty. What I would do is either have different charts open, right? Have different charts open just so that you can apply it onto different time frames, right? But if you're looking at it as an analysis, firstly determine the period in consideration. So you could be looking at, like in this case, for example, what we just saw was the H1, and then we'll draw it on a daily high, high and low. All right. So you identify the line along the lows and the highs and the lows. You basically do this. Identify the high points and the low points, right? The high points and the low points. Okay. So I identify the high and the lows, and as you draw a top line for the high, bottom line for the low, what you actually end up with, a top line for the high, a bottom line for the low. Within the day, you end up with that box, right? A bit of a rectangle, but you end up with that box that encompasses. It's almost like drawing a daily candle there, right? It encompasses all the candles. What would look like is you look something like that, right? I'm terrible at drawing, but you could be looking at candles like that, and that's why you would have this whole box identifying the high and the low. Okay, straight away it gives you the view of whether boxes are moving up, rising boxes, or falling boxes. All right, now let me ask you that question. What happens if you see a series of rising boxes, right? Imagine this is on the H1 time frame, daily close. You see a series of rising boxes, maybe something that's in the middle there, and then again another rising box. What would that actually show you? What would that actually indicate to you? Is prices towards uptrend or is prices towards the downtrend? Bullish, great. Bullish trend, uptrend, fantastic. You guys are all listening and paying good attention. And if it was on the uptrend and bullish, what would you be looking to do? What would you be looking to do? Buy it up, sell it down, buy. Great. Straightforward, right? So when you start looking at that, you'll be looking to close, look for it to break above the previous box, break above the high of the previous box, and then you'll be looking to buy. Yes, together with other confluences as well, not just the box. Never use one indicator alone, never use one system alone. Put a few things together, gives you a bit of a more confident, more confluences to build that confidence towards the trade or towards the trade entry. Okay, so you're looking for it to break above that resistance before buying. So again, another example here. This is the US yen, the US yen on the H4 time frame. Okay, US yen on H4 time frame. You can see that previously it was dropping towards the downside. We've got our boxes there. And in this case, because it's on the H4 time frame, right? So I'll just give you a quick reminder here. Usually what I do is on the H1 time frame, I would always draw it on a daily close. Okay, so I see the question there from Desiree, finding a daily close indicator. Not just that, because on the H1, you'll be looking at the daily highs and lows. On the H4, right, I'll be looking at the weekly highs and lows. Right, I'll be looking at the weekly highs and lows. I'll show you that shortly, Steffi. All right, so we jump onto the charts later. Towards the end, we'll jump onto the charts. We'll draw the boxes as as we go along. All right. So you just draw a box. This is on Trading View. You draw a box and apply it, looking for the high and the low points. Again, the low and the high points. This point here will be the high and then the low. Ultimately, what we're looking for is with that level there, forming a good resistance. What we'll be looking for is as price pushes up, right? There will be other indicators or other systems or other methods that would probably have got you into a trade possibly earlier, possibly at that point as it bounces up. Okay, this is another one to add on to it that will give you that confidence as you're buying it up, as it breaks above the previous highs, the two previous box highs. You could see that it will continue pushing up with a first target level at about that previous box high. Okay, there's an indicator multi-time period chart in TradingView. I'm not sure. I was just looking through TradingView today, trying to, because I was painstakingly drawing all these boxes. So I was trying to find a way to do it easily, but it just got a bit not exactly what I wanted. So it doesn't take too long. It's something that you draw once a day as you add on to it. You don't always have to draw those as well. This could be one of the other methods that you add on. So you don't always have to draw these because it does tend to get a little bit messy. Okay, but with this on H4, we're looking as it breaks above that high, as it breaks through a rising, I'll scroll back again, a rising box or falling box, a rising box pushing up. You can see that it breaks above. You'll be looking to buy. Trend following, momentum towards upside. Again, with that box there from here, all right, from this box pushing across, you see as it breaks above that point, you'll be looking to buy again. You'll be looking to buy again and again as it breaks above the next high of the previous box. Okay, so in this case, you would have one opportunity here. As it breaks above, you have second opportunity there. As it breaks above this point, you have a third opportunity again, right? And then doesn't break above, right? So it comes back down, it doesn't break above, you wouldn't be looking to buy, right? And then you can see this one here, right? It just breaks above before turning back down. This was the intervention that we saw that came from the Bank of Japan, and that's why we saw that big push towards the downside. Okay, so in this case, hey, you would have been looking not to sell. You wouldn't be looking to sell here. So if any of you were thinking, oh, maybe I could sell because it breaks below that previous low, right? You wouldn't be doing that because the trend is towards the upside. The trend is towards the upside. So remember, trend following, momentum following, pushing towards the upside. We wouldn't be looking to sell it down unless we see further boxes develop below, closing below, then we'll start looking to sell it down. Okay, it is a little bit lagging. It is a little bit lagging because you are reacting to price movements. You're not anticipating, you're not predicting, so it's a little bit laggy, but it gives you very quite clear visuals when you see price breaking a level, either towards the upside or the downside. Right, so this is the US yen on the H4 time frame. Which asset classes, right? I'm going to go through the slides relatively straightforward slides. So I'll go through the slides and then we'll jump onto the charts to draw it on. We'll apply different indicators onto it. We'll look for possible trade setups based on the boxes towards the end of the session. So which asset classes can you apply this on? First off, remember that the Davas boxes was created firstly to trade in stocks, right? Created firstly to trade in stocks. So it was developed mainly for trading stocks, right? And back then, like I was sharing with you, you could only look to buy. So it's only to enter a trade on a rising box, right? Only to enter trades on a rising box. It uses the highs of the box when it breaks above, right? So they look to buy. Once it breaks above a high, they get into that trade. And also once it breaks above another high, so I'll come back to this, right? So imagine you bought there. I'll clear out this just to clarify. How do I clear it? Okay, so imagine you bought it there and then it goes up. Once it breaks above the previous high, you move your stop loss up again. Okay, so once it breaks above highs, you'll be looking to move your stop loss level towards the previous high. How Davas actually previously did that was he'll keep adding on trades. He wouldn't close out a trade, so he'll move his stop loss towards the previous high. He'll enter another trade. If he continues going up, he'll enter another trade. He'll move all the stop losses to the next high, and then over and over again until it reverses completely back down. He'll close out all the trades will get closed out at stop loss, but in a profit. Okay, so you'll be looking to highs of the boxes to breach to move your stop loss level higher. How many days content this box to determine up or down trend? I would say that it's not so much days, but how many boxes? I would say that, you know, if you get a series of, if you want to apply this as a trading strategy, then I would say start off with a good, if you're looking at days, maybe 10 boxes, right? Add on to it 10 boxes, then you build that trend, or you slowly look to identify trend. It's very hard to tell you how many boxes, because if all the boxes look like that, there's no higher highs, it's pretty much in consolidation, then it's going to be, you're going to need more boxes to identify a trend. But if it keeps going a higher high and a higher high, then it's going to be, you know, even 3 boxes is going to give you, or 4 boxes in this case, is going to give you very clear identification of an uptrend or a downtrend. Okay, so again, for those of you who want to apply this to your stocks trading, right, you don't have to just use it on rising boxes, but traditionally on rising boxes, but you want to focus this on growth industries, and this is very important. High volume, I cannot stress this enough. This was developed with the idea, or with the requirement, that you have these boxes and the high volume of the instruments actually shows that there's a big push, right? There's a big push towards the upside. So high volume becomes very important. And let me ask you this question: when do you traditionally see high volume come into play in trading stocks? When does volume traditionally increase when it comes to trading stocks? What do you guys think? There's almost one specific occasion or fundamental reason, fundamental event that causes volume to increase quite significantly. FOMC, maybe that's one of it. Interest rates, FOMC, yeah. Now we're talking about stocks now, so you get a bit, just to give you a bit of a hint. Company stocks, equities, reports, yes, quarter end, P&L, right? Earnings reports. So that's when we traditionally see higher volume. Okay, so just to give you an example here again, we don't have to just apply this onto FX, right? You can apply this onto, for example, stocks. We're looking at Tesla here, and this is on a daily time frame. This is on a daily time frame. We actually see this. I've drawn boxes based on a month, right? So hourly, day, 4-hourly, weekly, on a weekly close, and then when we're looking at the daily time frame, we're looking at a monthly close. Okay, so you can see that I drew a box here back in August, September last year, and then again September, and then again in October. You can see earnings report here, and that's why we saw that big volume push. And as it broke above that previous high, the previous month high, we saw that push towards the upside. Okay, then you can see volume becomes very important because there's no, it's past that already, it's gone up, then I came back in, hasn't broken above, but it's breaking down from that point. So a lot of volatility there as it broke below that previous box low. You can see a bit of a push towards the downside. And you can see that you wouldn't be looking to buy here because we do have this level, forming a bit of a resistance level there as well. All right, so resistance levels still come into play. Could be a lot easier to identify resistance levels with your boxes aligning, or the confluence of boxes. And then as price comes down, breaks below that point, again a higher volume event. And as it breaks below that point, you can see it broke lower, bounced back up, and then when price broke again strongly below those points and that previous low, we saw that big push towards almost that same level again, right? So the boxes tend to line up in a bit of a confluence, and then it pushes back up again, a high volume event, pushing price down. In this point at this time, it didn't break either the high from the previous high, or that previous low is still within that move. But then after this event, you can see that price broke from that previous low towards the downside. No worries, Pedro. We'll catch you again. We'll catch up again after the sessions. All right. So we see this pushing down, forming a good strong support towards the downside here. And then again, high volume event, breaking a high, previous high, and you see price pushing up. Okay, so when you're trading, how it's set up before, again, quick reminder, doesn't have to be just rising boxes. This was back in the day. So this was back in the day. What you're looking for is for price to break above or break below the last period high or low. And then also you want to pay attention to the high volume instruments, high volume events. Okay, that's when you apply Davas boxes onto trading stocks. But what happens if you want to apply Davas boxes onto trading FX? All right, Davas boxes trading into FX, you're trading as it breaks higher or to the downside, right? So like the example I was just sharing with you, even on Tesla, because now you can actually, we have the ability to short it or to go long. So you look for to enter trades as price breaks a high or a low of the previous box. The limitation is that there is no accurate way to see true volume in FX, right? No accurate way to see true volume. What you can only pay attention to is, like you guys are saying, FOMC, interest rates decisions, key news events. That's likely to cause, more volume, but it's going to have a more of a it depends on what instrument you trade. If you're trading, say for example, the Aussie Kiwi dollar and it's FOMC news, we're not going to see a lot of volume there as well. Okay, is this a breakout strategy? Not really a breakout strategy. I would say it's more momentum, but some level of a breakout, because you are looking for it to break above that previous high or that previous low, or break down from that previous low. So not completely a breakout strategy, more trend following, more momentum, right? So I'm not trying to catch that big first move. We're possibly even catching a continuation move towards the upside or the downside. Hope I answered your question there, Steffi. All right, so as we look into applying the Davas boxes onto FX, right? This is the Aussie dollar on a H1 time frame. Again, did it on the daily time, daily highs and lows here. So you'll be looking, right, high point here, and then the low point at that level there. As price breaks below the low, you can see that move towards the downside, right? Comes back up. You wouldn't be looking, again, I want to stress this, I can't stress this enough, because my experience is that whenever I teach someone the Davas box, what they tend to do is go, oh, every time it breaks a level, I'm getting in. Every time it breaks a previous high or previous low, I'll jump in straight away. Do remember, it's a bit more of a trend following momentum indicator, right? So you can see that previous move towards a downside, despite it breaking towards upside, don't look to get in yet, all right? You can see we have a bit of a channel towards the downside. As it breaks up, stay out. Wait for it to come back in. As it forms that low, we look for it to break that low. And you can see, hey, it broke this low and this low point, right? Draw that right across. So as price breaks down, then you'll be looking to follow with that trend, follow with that overall downward move to trade it towards the downside. All right, so as it comes down over that day, gets to a low point, bounces back up, hasn't cleared above a previous high, still not looking to buy, but we're looking for it to break lower to sell it down. Okay, you can see that as the next day consolidates, tries to break up again as it breaks the previous day low, and in this case a 1, 2, 3 day low or box low, that you'll be looking to sell down from that point. Okay, quite straightforward there as it goes down, again forming a bit of a horizontal support there at that round number of 0.67. You see price consolidate, sit right across, and then it pushes towards the upside. Still wouldn't be looking to buy. I'm not looking to buy the Aussie dollar up. I'll be looking for it to trade back down again, right? So I'll be looking maybe today consolidate, maybe tomorrow you'll see it break today's low, and then we'll be looking to sell down. Good question there is, how do we determine the target to take profit? I wouldn't use the Davas boxes to identify take profit levels, right? Because one, you could do it based on previous box lows or previous box highs, but what happens is that it could be very far away. It could be a bit of an unreasonable level And for example, in the Aussie dollar case, or across the board, right now we're all in historic low levels. It would be very hard to identify box lows, right? So how do I identify take profit levels? I'll still use the Fibonacci, right? I'll still do a Fibonacci extension or projection levels to identify take profit levels, or round number levels to look for take profit, or if you have something recent, right? If you have something recent, then look for the recent low points. So for example, if this was the end of the box, if we're looking to sell it down, then I would say my take profit would be at that point because of these levels here, right? So I'll be looking to sell, stop loss up there, take profit down here. Okay, hope I answered your question there, Tat Choi. So many ways to look for the take profit when using the Davas box, but I wouldn't just use the boxes for take profit. I'll use it more for that entry, right? And also the stop loss, because I'll put a stop loss above that previous high point. But take profit levels will probably use other indicators, other tools to identify the take profit levels. Okay, another example here. This is a good one in terms of the take profit level. You can see that as we break towards the downside, you wouldn't be looking to sell. We just went through this example, but this is on H4 time frame. You can see that, hey, price formed a strong resistance there. You look for price to break above, then you look to buy it up. In this case, if you're looking to buy here, right, stop loss would be unreasonable. This would be a typical stop loss level below that point, but I would say even if you look to buy, it would be below that high, right? Because it's a good resistance level. So I would say my stop loss could be just beyond that support level now. And then my take profit first level, can't draw it straight, would be immediately at that previous high. So there's a recent box there, so I'll be looking to get to that point. Why not use day one candles instead of boxes? You can use day one, but day one tends to have all the tails, and also you won't be able to apply it, to merge an H4 onto a day one. No, actually H4 will be on a weekly candle, right? So you'll be able to merge it together, and this gives you a bit of a multi time frame analysis. It gives you a multi time frame analysis because if I just clear that out, okay, it identifies for you in this case that the US yen, as it breaks, so imagine at that point, right, what it's actually telling you. If you were looking at this just on H4, you say, okay, it's broken that near-term high, right? But what you could actually be telling yourself, or what you actually indicate to you in this case, is price is breaking above a 1, 2, 3, 4, 5-week high. Right? It's breaking a 5-week high. You're going to have a bit more confidence. You're going to be looking for it to continue pushing towards the upside. Okay, and then you'll be looking for, I think we have other boxes to identify that upward move, or the target for the upward move, or a projection towards upside for your TP levels. Would I recommend combining the Davas box with the Henkin Ashi indicator? You can. I think those would be, it seems like it would be a bit too heavy on both. So I would say, how I would use it, and I'll show it to you after this, is that I would apply it, possibly the Davas together with a stochastic indicator, or not so much the MACD, but stochastics and the fib levels, or the Ichimoku as well. You could apply it to the Henkin Ashi indicator, but I'm just wary about, a situation where it ends up being too confusing, right? Not really confusing, but being too messy. Okay, good question. BL, I will be, let's apply it, right? I'll apply this onto gold and indices as the next example. Okay, so that is the US yen on the H4 time frame as we look to trade it up as it breaks above the previous high points. You'll be looking to buy it towards the upside. Okay, so improving on the boxes, what I'm going to do now is I'm going to jump onto the charts. Oops, let me do that. Okay, so I have actually the euro dollar here. I was just drawing all this up before, let me do that. Okay, before the session, right? So I just sat there drawing, took me a couple of minutes to draw all the boxes there, right? But one thing I want to do is to firstly apply the stochastics onto this, right? So you can see that, oh, why are my lines missing here? Just give me a moment. Okay, you can also see that as price. So, applying this, adding on other tools to this is that as the stochastic goes into that overbought region, as it turns out of that overbought region. Okay, I'll do that as well, Steffi, how to draw the boxes. Right, as price gets out of that overbought region, putting a vertical line there, you can see that price has actually tested and rejected those two levels towards upside. That gives you one indication. Hey, you don't want to use the stochastic alone, right? You don't use the stochastics alone to push towards the downside. So we apply stochastics and also the box. As price comes down, momentum shows you it's pushing towards the downside. You would only be looking to sell down as it breaks past that low, right? As you break past that low, then you'd be looking to push towards the downside. And also, good one there, you have that double top formation, that price or the chart patterns. So you're putting many things together, right? You're putting many things together, not just Davas boxes, putting in stochastics, you're putting in chart patterns as well to give you that idea, right? So you can see that in this case, we have a double top, right? You'll be normally looking, double top, you'll be looking as it breaks past that neckline before you sell, which also coincides with your Davas box, right? And the stochastic telling you it's overbought, turning out of overbought, be looking, getting ready, but truth be told, as it pushes towards the upside, you might be a bit uncertain whether you should be selling at that point. As you see price come down, be looking to sell as it breaks towards the downside. Okay, question, stochastic numbers. What stochastic numbers do I use? Typically it is 80 and 20, right? Typically stochastic numbers are 80 and 20. I haven't done it here just because it's not my template, but on my MT4 I do it at 85 to 15 just because I want to identify the really extreme overbought or oversold regions. Will you enter when price break the neckline or RSI cross overbought line? Yeah, so that's what I was saying is, that I wouldn't just look to sell at that point just because it tells me that it's overbought, right? So at that point, what typically happens for most retail traders is that you'll be looking, go, oh, I see a double top, I'm thinking about selling. That's your first idea. And then you see stochastics forming, you're thinking, oh, I got two things telling me that I should be selling, right? But it's just shot up so strongly. The previous time it shot up so strongly, I'm not sure whether I'll be selling. And then what happens is you sit there thinking about whether to sell or not. And then you see that consolidation. And then you'll be thinking as it breaks that point, what you should be looking to do on a double top is as it breaks that neckline, then you start looking to sell. All right. I wouldn't go into the lower time frame, because if you did go into the lower time frame, it might actually be a bit more conflicting. A bit, it might show you at some point there, it might show you some possible upward move, or that might show you some upward move, and then you might get more confused. All right, so I tend to try and encourage, if you're trading in this case on the H1 time frame, keep it on the H1 time frame, enter trade on the H1. All right, and as Steffi was just asking, how do we draw the boxes? All right, so I'll come back to here, the euro dollar. So I got my box indicator there. I'll just go, okay, I'll look for that low point here. So these dots here tells me it's a period of 1 day. So I'll just go there and form that. So I identified the low point and the high point. Okay, again, I know the high point is here, so I've identified a high point and then that low point there. And again, I know that's a high point and then the low point. So keeping it within that day period, looking for the high and the low point. Okay, and then one more. I know that's my low point there, and then my high point towards the upside there. Okay. So if you did it on the daily time frame, let me just change the chart just so that we can apply it onto something else. I think someone's asking about gold, so I'll apply this to gold. Looking at it on a daily time frame. Oh, my lines are gone. Let me just do this. Where was it? Vertical. Okay, there we go. So we'll have that, then you would just apply this again, same thing, chart box onto your daily time frame there. So they'll identify that high and the low for June in 2021, right? And then you just keep drawing right across. In this case, about there, because that's the low point and then the high point, and then we'll just apply this right across. Those long vertical lines are just period separators. So if I did a right click there, it's just a long vertical lines identifying period. So you just go in there, right click, settings, and then vertical grid lines. All right. So I think BL was asking, does this work on gold? So you can see it there as I do a couple here. Just draw a few more. All right, there we go. So you can see that as price breaks above, oops, so I need to go one more across. Right, as price breaks above that previous point, that previous high, and you'll be looking to buy it up, right? And in that point as well, you can see it's inside that overbought region. We see price pushing towards the upside. Okay, I think it was BL. Yeah, BL, I hope that answers your question on gold, and it does work on indices as well. Let me put indices up. So I did the SPX before. It is reaching, the SPX is reaching a key level now. Okay, makes it a lot easier to draw this as well. You can see that those are the levels. So here we go. I'll just draw it a bit rough and ready. Right, so this, because we're doing on the daily time frame, this is on the we're doing a monthly close. We are towards the end of the month, not yet. You can see now it's testing that previous low, right? It's testing that previous low point. You'll be looking, right? You'll be looking not for this month, not for this next couple of days, but you'll be looking into next month. Hey, will price close below? Will price close below this low point? If it closes below, then we'll be looking to say, can I sell it down? Can I sell it down? If I do sell at that point, let me do that. Then my stop loss would be above my resistance level. Take profit will be towards the downside. Where could my take profit go in this case? Like I was sharing with you, if we zoomed out, you realize that you don't want to be drawing boxes all the way back to December 2020, but you could be looking at swing lows or swing high points. In this case, at that 35.26 level, or really key level here, or big swing levels at 32.41, right? So be looking for that on the monthly to close, break below. Can we see 32.41? But there's a lot of levels in between to consider before we get to 32.41. Okay, so that'll be a longer term trade, a daily time frame on the index. If it does break below that low, and you can see that the last time we tested this was back in December 2020, right? But it came back up. So if it does break below, we're hitting his almost historic levels, multi-year level low. Can it trade down towards 32.41? All right. Hope I answered your question there, BL. Steffi, are you okay in terms of drawing the boxes? I hope you guys, all right. Let me see, did I miss out any questions? So I would not just use, again, a quick reminder is I will not just use the Davas boxes just on the boxes alone. Right? Apply the stochastics to it. Make sure you have a support level, support resistance levels onto it. Apply your fib levels, because you could be looking at possible take away. You could be looking at possible fib levels towards the downside there, and a projection level towards that 6180, which is also that 3,200 level there. All right. Lucky last for the Nasdaq. Clear that out. Again, very similarly, it is at that point. It is at that point where we're coming close to, I'm just doing a rough and ready boxes here, right? We saw that push towards the upside. We saw it break. We saw it break a good resistance level to push higher, right? So this gives you your view. And then I wanted to do one more here just to identify, right? You can see that key level there. You can see a bit of a level there to that target. And as it breaks down, you'll be looking to sell it down again. So same thing, I would say very similar to the S&P is that it is approaching that key support level. So we're looking now, bouncing a little bit. Wait for that month to close, look for it to see whether it's going to break lower onto the next month. And if it does break towards the downside, zooming back out again. In this case, not so, we're looking at September 2020 at a key level, swing low at about that 10701 level. So not a big downside yet, not as big a downside as the S&P, but we're still looking that if it does break down, we got that level towards the downside. Okay, Steffi, how do I do that with the fib levels? Fibonacci, I think I'm pretty sure there's a Fibonacci video out on the IC markets YouTube channel, so check that out. But just a quick one is that you can use the Fibonacci tool there, and then what you do is from the top, right from the top all the way down towards the bottom, from left to right, and then as you get that projection level, you see as it traces towards the downside. Would I recommend projection or 127 extension for TP? I would say, apply both, right? Apply both just to see which ones you get a good confluence on. There's no, one method or one thing that would work all the time. Apply both just to see what confluence you have. For me, sometimes I don't even apply the fib levels all the time. I would just look and I go, if I have a swing low or swing high, I'll just use those swing points rather than always having to find a fib level. Okay. Consider economic situation there. Is it possible of downtrend on NAS? Yeah, for sure. Right. The way let me just clear that out so it's a bit easier to see. The way the S&P is moving is highly correlated as well. I think that we're going to see a bit of a bounce, but we're still looking for that downside. And you can see that we have that big, massive trend, right? As we draw those boxes there, we have that big, massive trend towards the downside, right? So I would say would be very dangerous to look to buy it up unless we see a big, strong bounce. Maybe at the most we'll come back towards that 13,000 level, right? But at this point, not expecting big surprises. All right. So how did you guys find the session today? Did you find, do you think that Davas boxes will be useful and something that you might look to integrate into your trading setups? Thank you, Bob. Really appreciate it. Thank you, Diana. Great. Thanks for that, BL. Super. On the Wyckoff, I think the video is up, so check that out. I will let them know that there is request for that, so we'll be looking to maybe add on to it. We'll try and need to learn them. Yeah, ask questions away, and we'll be happy to help integrate into your system in future. Fantastic. Thanks for that, Simon. All right, I hope you're enjoying the analysis I've been sharing with you as well. Gold has been going crazy. All right, so with all that, please remember it is a little bit quiet for the markets this couple of days. Don't try to force out trades. In the meantime, trade well, trade safe, and take care now. Bye-bye.